to the week of reckoning. Hello Adrian, and welcome back once again to my channel. It's 7:30 p.m. once again, UTC +8. So thank you for joining me wherever you are watching in this world. And it has been a very, very, very exciting morning, hasn't it? Bitcoin did quite a substantial, a substantial move once again. Was that the big move that we were expecting or what we were waiting for? Well, not just yet for me, but we will go into detail, of course, a little bit later. But first, let's see how the COVID virus is doing in overall in the rest of the world. So let's refresh here. And we are here. So the US is now at 965,000 people. I think we are going to be crossing the 1 million people maybe in a couple of days, most likely. Italy also is crossing almost over the 200,000 people right now. So yeah, let's see how things are going to fare in the near future. Let's look at the chart and see here. Or let's refresh. And we were at 2.8 million yesterday, and now we are close to crossing over 3 million people on the COVID virus. The positive news is that we are now seeing a little bit of a slope or like a flattening of the curve right now on the overall chart once again. So that's a good sign. The US is actually showing a very, very nice flattening of the curve. Spain still not. Italy is still going up. France is going up once again, but at a slower pace, I guess. Germany is still going up. UK is still going up as well. So, but yeah, it seems like the US is starting to see some flattening, and that is very positive, of course. Hi Darren, thank you for liking the stream, and welcome to the show once again. I think you were here yesterday as well, so thank you for watching once again. So let's go into what is first the overall news in the world, what is going on everywhere in this world, right? So let's first start with North America and see what is going on there. And in North America, the news is that the following. So the USC finds that the study of the coronavirus is far more widespread in LA County than reported. So basically, they have found that in a sample of adults that 2.8 to 5 to 6% of LA County adult population already have the coronavirus antibodies present. So that means that 221,000 to 442,000 past infected people. It means that people were infected, but they didn't know, they weren't aware that they were infected. So they could see that there were still antibodies of the coronavirus. As you know, a lot of people get the virus, but they don't develop any symptoms. So they call them asymptomatic. Sorry. Yeah. Anyways, so they don't show any symptoms at all. So I think a lot more people have the virus than we are expecting, and that's some very, very troubling news. I think maybe you think you're safe, and you don't show any symptoms, but you still go around and hang out with your family, and then give somebody from your family the virus without you knowing yourself. So I think that's a very scary thing. Anyways, so a lot of people, after we get more and more testing, a lot of people will detect that maybe they had the virus before already, right? So I think that's another problem that we are going to have in our future, right? Where people don't show any symptoms and think that they don't have anything, and then spread the virus once again like that. Another news in North America because of the coronavirus is Trump is suspending the immigration into the US during the coronavirus. So he basically gave an executive order Wednesday to halt immigrants from entering the U.S. So basically, he wants that American people who are unemployed right now to get the jobs and so on and so on. So prioritizing everybody, the U.S. citizens first before anybody else, basically. So he's shutting down basically the whole U.S., or at least partially the whole U.S., in the hopes that that will also help the economy and get unemployment, back to employment once the lockdown has been eased down. And in some states, there are already governors that are opening or closing down the lockdown or limiting the lockdown. So it seems like they are trying to reopen everything, and let's see. So like I said, in some countries in Asia, like Japan, like in Singapore, they did that as well. They reopened everything, and what happened was a second wave. Similar, actually, in China, it happened also in China. So let's hope that for the best, and that things stay well, and we keep the flattening of the curve, and not because of opening the economy again, that things go bad once again. But yeah, I think it's quite logical that he's doing these kind of measures, and yeah, it's a sad thing for global economy, but that's how it is right now. Everybody is sort of like a little bit more selfish, let's put it like that, to make sure that they are safe and healthy. Let's move on to South America. No, let's go to the European Union first. So in the European Union, they have found, well, as you know, the European Union agreed to a 1.2 trillion extended fund for the coronavirus. And what what Spain is suggesting is, basically, instead of giving it as a loan or something like that, they said, why don't we use the budget here to raise up a 1.5 trillion euros in perpetual bonds to pay for a post-virus economic recovery. It's a smart move that could reduce the burden on struggling countries, but may not appeal to both bondholders and other member states. So this is quite an ambitious plan, to be raising 1.5 trillion in bonds, and that of course is going to, if in case that would happen, 1.5 trillion bonds, that's like as you can see here, Goldman Sachs analysts reckon public debt in Italy and Spain will touch 161% and 15% of the GDP respectively this year. It means that their debt will be in Italy, for example, more than half of it than the whole GDP. So whatever they're producing, they would still not be able to pay off their debt this year, basically. So whatever they're producing, their whole GDP. So that's a crazy situation, of course, and adding on to more debts, or adding on bonds to that, and basically putting that state as the person that is warrantying the bond, is something obviously that is a very scary. I mean, a lot of countries will be, let's say, very hesitant to be agreeing to that idea. Thank you, John Raymond, to be liking the stream, and welcome to the show for today as well. So yeah, but that's obviously a suggestion that is on the table, proposing long-term bonds, and they would spread it out from the beginning of 2021. I think it would be for 10 years or something like that. So it's not like something that is for a short-term period or anything like that. But still, it's a quite risky plan, if you ask me, of course. Then let's move on to the South America. South America. Let's move to South America. Where is South America? Here. So in Venezuela, as you know, there's a lot of issues right now. We have hyperinflation right now in Venezuela, and there has been a lot of issue, and most of those issues were, of course, because of the sanctions that the U.S. government and other governments has put on Venezuela during who are still trading with the Venezuela. And as you know, Venezuela is a country that is very, very dependent on their oil reserves. So, as you know, oil did a major, major crash just a couple of days ago. We've analyzed it a little bit, how oil went to minus, I think, minus $40 per barrel on the futures. It went to literally to zero on the spot price, crude oil. So it's a crazy situation, and the problem is Venezuela is very dependent. Their GDP is very dependent on oil, and since oil crashed so much, it's just bringing the country even in more bigger problems. And what happens is that the U.S., who has Chevron, an oil company who has their oil company based in Venezuela, to stop their company, just to completely stop extracting oil in Venezuela as well. So yeah, I think more and more of these situations are going to be arriving in the future, and maybe it starts with oil, but like I said, it will trickle over into other industries. For example, I think the next one will be the farming industry. That will be hit very, very badly with the deflation, and that's what's going on right now in the economy. Everything is in a lockdown, so there's very, very little demand for anything. So there's a lot of deflation, a lot of oversupply of products that are not being used, and that's causing deflation and lower prices. So for some people, of course, they love it because you're getting lower prices. But if it's not sustainable, the lower prices, of course, the whole sector is going to be crashing and burning. So that was South America. Let's go on to Africa. In South Africa, they have banned alcohol and tobacco. So, while in the US, stores selling alcohol and tobacco have been declared essential businesses, so they are allowed to stay open, which is kind of funny, I think, but I guess America is like that. Tobacco and alcohol is very essential during lockdown, guys. So just to keep people happy and not unhappy, I guess. But anyways, in the South Africa, sorry, they are banning alcohol and tobacco. Some other countries are doing exactly the same thing. For example, in Thailand and Greenland, and actually in some places in Mexico as well, they are banning tobacco and alcohol. So these alcohol companies, they actually switched over into producing hand sanitizers, and as you can see here, this is quite creative. These were actually bottles that were containing gin, but now they are containing hand sanitizers from the South African distillery. So although the market is crashing, it's up to the companies to still be very, very, very inventive and pivot. Good companies will always be able to pivot into a better or a business plan that can salvage and save their own company without having the government to bail them out. For example, like I said, there's so many companies that were doing really well, and then suddenly, because of the pandemic, don't do well anymore and need saving from the government. But the best companies are the ones that are inventive and find a solution themselves. Like a lot of restaurants who close their actual restaurants, but then they do delivery. For example, they pivot into delivery, or they sell frozen goods into supermarkets, for example. Those are all more creative ways to circumvent the situation right now. A lot of people who cannot work are working now or studying now online. For example, teachers who cannot teach are doing classes online, and that's how we basically try to circumvent the situation. And it's good to see that some companies are doing the same thing overall in the world. Let's move on into the next article, and this is a mixture between Asia and the US. the state of Missouri is actually suing China, the Communist Party, over the coronavirus pandemic. So they're blaming the China for handling the coronavirus. So the Missouri Attorney General is pursuing a lawsuit against several Chinese entities, and this is actually the first time that this has ever happened. A state that is suing a country, basically. Well, I don't think it has a lot of chance that it will help because because of the diplomatic immunities. So I think it's basically very futile, but it does bring up some, let's say, some interest or some attention that there's a lot of people who are really thinking that China is to blame for the situation. They're trying to find, a culprit and, somebody who has to pay the bill. And in this case, Missouri is thinking that, China is the culprit, and they want to be paid for what they have done. Anyways, moving on to the next article, that is Delta. So Delta loses 534 million in the first quarter, and it expects a 90% hit ahead. So yeah, that is definitely not really good. So the biggest and the most profitable airline lost $534 million in the first quarter. Can you imagine? Like, it's crazy. And they also warned that during the revenue during the April through June quarter, the second quarter, which usually is a period of a lot of business, will plummet by 90% compared with last year. 90% drop. So yeah, that's pretty much insane. And here, as you can see here, United Airlines said on Monday that it would record a pre-tax loss of 2.1 billion. So United Airlines would be losing 2.1 billion dollars. And for Delta, the 500 something million was the first loss in almost 5 years. It's really crazy times. And Delta is now paying more in refunds for canceled flights than it receives from new bookings. At the end of March, it was burning through 100 million a day, though it hopes to cut that rate in half before July. Woo. But of course, the government is going to step in. So Delta will get 5.4 billion in grants and loans from the federal government to cover the payroll cost through September. So from now to September. What happens to employees after the federal money runs out isn't clear. So yeah, 5.4 billion, once again, money that is being granted by the government to bail out these companies that are going broke. And yeah, it's definitely, like I said, it's not the first company that they are bailing out. As you know, from yesterday, they've been bailing out and buying up assets. I think what was it, the amount, $54 billion on a daily basis or something like that, something crazy. It's just really insane. That means also that all the debt from all the big companies will be owned by the government, which is, it's just crazy, to be honest. Yeah, crazy. Anyways, I've also told you guys that what I'm seeing is a trickling down effect from the first deflation effect, and that was the oil industry. Hi, Luis Rodriguez. Thank you for following and welcome to the channel. So this is Tyson Foods, one of the biggest meat producers, and is suspending work at this pork processing plant. And they are saying that the plant is employing 2,800 people, and they are going to be shutting down. So that's another 2,800 people that are losing their jobs. And like I said, the trickle down effect from the oil industry, the next one, like I said, is most likely the farm industry or the food industry. Because once again, if restaurants don't have customers, then they are not buying food from from producers, from farmers, right? So as long as we are in a lockdown, there will be oversupply for food, for everything, right? Let's say you have a certain amount of corn that you're farming on a yearly basis. That corn, you can't keep storing it. The corn is going to be bad after a while, right? But if nobody wants to buy corn, then you get an oversupply, right? You are basically fighting amongst other farmers to get rid of your corn, because yeah, the corn is going to be useless, zero anyways. So you will be trying to dump your corn at any price possible, and that's because there's no demand, right? So that's what is deflation, and that is causing all these economic dramas. And once again, the evidence is that we are not just done yet. We can see bailouts from so many companies. We can see the government stepping in and buying all these assets, and it seems like it doesn't matter anymore what assets they are buying on a daily basis. But it is not sustainable. So as long as the economy is on lockdown, and even if we reopen, it will take a while for everything to settle. Let's put it like that. So yeah, this is just going to trickle down to other sectors, and other companies are going to be shutting down. And also, like I said, how much support can they be giving? They are already talking about a 6-month plan, so that they would be paying everybody for the next 6 months. That's until end of the year, basically, almost, right? But then, what if we are still stuck in this situation? What if we get a second wave or a third wave or whatsoever? It's not going to be as simple as we think it's going to be. But what I have also said is that whatever happens in our economy, it really is not really correlated with the stock market, right? So the stock market, meanwhile, when we have all these companies going broke, we have all these I think we are at like 22 million unemployment requests in the US. It's crazy. But what happens with our stock market? Let's go into our S&P. Yes, that's right. We are still in basically an uptrend, as you can see. So since the crash, we made a nice recovery, and we are very, very high. Actually, we are back to the zones that we are very, very interested in. So what I'm seeing right now, let's go immediately into the technical analysis of the S&P chart. What I'm seeing right now is this could potentially, I'm not saying that it will be, this could potentially become a double top pattern. And that is something that is going to be causing a lot of drama in the near future, if that would be the case. But there's also, of course, the possibility that we are going to be starting to make that V-shaped recovery and go back to our previous highs. So nothing is sure just yet. What we can only see right now is something that I've been telling you guys before already. We have to see if we get a monthly close above this EMA, above this yellow line, yes or no, or if we get rejected, yes or no. If we get rejected from this EMA line, then of course we still have the next month to be trying again, but that would not show a lot of strength in the market. Right now, if we look at the weekly, as you can see, we are still getting rejected here from the EMA 100, and still, of course, below the EMA 21, which is on the weekly a very, very important thing. So as long as we keep closing candles below the EMA 21 here on the weekly, we are still technically in a downtrend, right? So for me, once we start closing weekly candles above this yellow line, then we can make a bullish cross, where that would mean that this yellow line would be crossing this green line here, and then we can start talking about a reversal pattern. But for now, all I'm seeing is still this one. That's the bearish cross, the yellow line that is crossing the a green line there, and if this yellow line, if this green line starts moving, keeps moving down, at one point it's going to cross this purple line, and that is actually when we will be entering a depression. So if that would happen, things are definitely not going to be looking good for the stock market. Hi Raman, thank you for following and welcome to the channel. So yeah, for now, on the short term, as you can see, still rejection that I'm seeing on the weekly. Let's go on to the daily. The daily actually closed really well yesterday, as you can see, in a bullish engulfing candle, this one, and it closed above the EMA 55. So that was a really good close actually. So this looks like we have some continuation of today, and as you can see, the market is not open just yet. We are just trading still in the pre-market. Let's go into the pre-market action. Pre-market action is at 285 and we closed at 282. So that is a nice bounce from the stock market. Still, as you can see, even though there's so much trouble in the world and the economy, the stock market doesn't care, because the stock market is not really correlated to the economy. Although, of course, if the economy is doing very badly, at one point the stock market is going to be crashing as well. Like I said, I consider the economy like a lagging indicator for the stock market. So of course it cannot keep going up all the time if the economy is super bad continuously. But so right now what I'm looking for is, like I said, maybe we will form a double top pattern that would be very bearish, and then, you know, we would be expecting in the short term a drop down. If we get a higher high, so if we today can be closing above or at the same level as this previous close here at 2864, I would actually be very bullish, and most likely we will be seeing continuation of this pattern, and I would be actually seeing it retesting 2900 once again. So tomorrow morning, we will see how the close is of the S&P, but that would be my thoughts for now for the S&P. Do I really think that this is a very good pattern that we are forming? No, because if you can see below here, this is the stock indicator that is crossing, and as you can see, every time we get a B, that means buy. And as you can see, if you bought here during that green period, you have made a substantial amount of money. And this is an S, which means sell. And when this blue is crossing down, this bearish cross right here, it means you should be selling your stock. So right now it is down, but as you can see, there is a positive slope here, so it can actually recross everything again. But for now it is still negative, so this is not really sure just yet. It's still pending. I would not be trading on a long or a short at this particular moment, although things are starting to look pretty bad. Even on the 2-day chart, as you can see, we are getting a sell signal once again on the stocks as well. Although, as you can see, because the reason why is because the stocks here are reaching a resistance point at that top right here. And if you look here, if you look at this is the stocks, as you can see. If we make a trend line right here, we can see that we are nearing a high resistance line right there. So yeah, it's possible that we will be seeing a rejection very soon, and then of course, if the S&P is dropping, most likely Bitcoin is going to be dropping as well. But for now, I still don't think that we will be dropping just yet. It still looks like, if we can see the CCI, it's still positive. If we look at the RSI is still pretty positive as well, has some space actually to go towards the bullish zone. Stokes are a little bit on the high end, but it can curl. So this still looks pretty good. That also means that maybe we, like I said, if we can close above this previous low body of the candle, then I most likely will be seeing another leg up towards the 2.9K or something like that, which also would mean for Bitcoin that it's possible that Bitcoin will be taking a leg up as well. So yeah, that's my thought on the S&P or the stock market for now. If we look at Nasdaq, the very similar thing as you can see here. We are at this point as well. If we get rejected here, we could maybe make a double top pattern as well, but everything is looking quite bullish. Even the yellow line, the EMA 21, just made a bullish cross with the EMA 100. I think that is quite powerful as well, so we can easily make continuation as well on the Nasdaq. But once again, I'm looking to see if we are if we would be able to break that previous high, previous body high at 8,900, and yeah, I would say 8,910. If we manage to break that or close above 8,910, I would definitely think that we would have continuation on Nasdaq as well. And Nasdaq has been the leading indicator right now for the whole stock market, because it seems like the American people are the ones that are leading the whole stock market right now. But the thing is, as you can see here, stocks are very overbought right now and are curling down at this point in time. So we have to be very careful as well with everything that is going on. So let's talk about Bitcoin. First of all, the weekly close. The weekly close. The weekly close, what we were looking at was very interesting. Of course, the weekly close was very bullish, to be honest. We were looking if the weekly would be able to close above the yellow line, yes or no. And it has been a really long time that we haven't crossed above the yellow line, hasn't it? Right? And as you can see here, we barely crossed above the yellow line, but we did. We closed above the yellow line, but we got rejected by the green line here at the EMA 22 and as well the moving average 20 on the weekly. But as you can see here, every time when we started closing above the EMA 21, we always had a very nice push or continuation of our trend, similar to our previous bull market as well. So does that mean that we are, is this confirmed now that we are going to the moon? No, that is not confirmed just yet. So hold your horses just now, although we are in a uptrend, because that's what the weekly is about. As you can see, we are still in our rising wedge pattern and we are still getting rejected from the EMA 55. But if next week we keep staying above that EMA 21, of course we will have a bullish cross between the yellow line and the green line. So instead of this bearish cross right here, what will happen is that the yellow line is going to keep moving up, and then this at one point is going to be crossing over the EMA 55, and that would be extremely bullish. But the thing is, that's one more week away. The thing is, we don't have to be waiting that long, because our monthly close is coming up already, right? So in a couple of days, in 3 days to be exact, we already have our monthly close. And of course, we are looking at it with very much interest. And right now, the EMA 21, the yellow line, is at 7,350. And like I've said before, this would change a macro trend. If we manage to close above 7,350, that would mean most likely continuation of our trend for the next couple of months. And when it's affecting a couple of months, then for me, of course, that makes it a macro trend change. So I'm still waiting for that. Are we going to get that close in 3 days? Yes or no? But what I can say is this week is going to be the most important week of probably for the next coming couple of months. Oh, and we got some spam. Thank you for the spam. Let's remove that spam, shall we? Who is that? Ioma Wobo. Ioma Wobo, can you not do that, please? Thank you. Who is that? Ioma Wobo. Yuma Wobo, can you not do that, please? Thank you. Okay. Anyways, so we are here in the the weekly chart, and yeah, we will know by next week if we are going to be basically breaking up. Anyways, so the next weekly candle can be breaking up, then we would be quite bullish. As you can see, the next resistance line is actually at, like, you know, next week if we are going to be that basically that line is maybe. So the next weekly candle can be breaking up, then we would be from where bullish, as you can see. Yeah. The next resistance line is actually from there. Like, yeah, you know, we would have our all the way up to 9K, over 9K that that we have chance to be hitting, and that's definitely possible as well. But yeah, let's not get too excited just yet. As you can see right now, we are here hovering at the 0.382 pip level, and I think that is a level that has a lot of resistance right now. But get too excited just yet. Sorry, as you can see right now, we are here hovering at the 0.382 pip level, and I think that is there. Now it should be. Thank you, Steffel. I think I resolved the echo right now. It's always nice to have. Yes, it should be okay now. I opened up a tab, and that's the reason why there was an echo. Sorry about that. So this is the weekly, and as you can see right now, it's very simple, right? So the next week we can either make a candle that goes like this and break up of our rising wedge, but as you know, a rising wedge usually breaks down and not up, and or the next candle can be like this, of course. But it's this week. Basically, it's this week. That's just pure beginner's luck that I pronounced your name correctly. So, anyways, so yeah, this week we will have the week that will show all and tell all and give us basically what we need to know for the next couple of months, basically. So this is quite important. So let's move out to our 2-day charts. Let's move down to our 2-day chart. Here's our 2-day chart, and as you can see, I've been speaking about this for a really long time already. We have a bearish cross here, our EMA 55 with our purple green line with our purple line at the EMA 200, and this is our green box that I have been targeting from since forever. If you've been watching this channel, and I've told you guys 7.8K, and this is also the Fibonacci extension of the 0.382 Fib line. How can you get that one? That is just the top of this one, where we had our top at 13,800 something, oops, to the bottom, this bottom here that we had at 6.4K, then to our top at 10.5K. So that is basically what I did, and you can clearly see that's the 0.382 Fib level exactly. So that's a very, very important zone. So that is basically where I entered the green box, or my shorting zone, because like I said, although everything is still looking quite positive, I am still yes, even after that weekly close above the EMA 21, I am still macro bearish, medium bearish, until of course we are going to be closing some candles, monthly candles, in a couple of days above that EMA 21. Then I will have to just switch. But I think it's very easy as a trader, in the trader's perspective, this one is very easy to risk manage, because, well, this is the green box. It's not like you have a lot of space to be going up or down, right? So if you are going to take a hit, then you're just gonna take a small hit and then switch it into a long position. Well, that's basically what my plan is as well. But anyways, so what happened in the past is exactly in 2004 is exactly the same thing. This is also a bearish cross. I can see it went down and it touched the green line, but the price when we had that cross was not as far away from the bearish cross, right? So the best example that we can have is actually in 2014. You can see it here, which is very, very similar to what we are having right now. And I have to move back all the way to 2014. Here. So we have this bearish cross here in 2014, and this is very similar to what we are having right now, because price, as you can see, dropped down really like a sort of like a capitulation candle, very similar to what we had, right, and to the 3,800. Then it made a bounce up, the sort of like a rising wedge type of structure. It went back down, but it then when it went back up and touched the purple line, so exactly the EMA 200 as well. But this one, you see, it looks very similar as what we are having right now. And then what happened after it touched the EMA 200, the next couple of candles immediately got crushed down below the EMA 21, below the yellow line. It hovered around it for a little while, and then we had a big crash down. So for me, that is looking very similar as the situation that we are having exactly right now. So we had the bearish cross, price was very far away, looks like a capitulation candle. We are going back up, and then it touches here our purple line, or our EMA 200, and then I am expecting that it is going to go down after. But of course, I could be wrong, and things don't always happen the way that it's that you think it will happen, and I will be wrong many times as well. But like I said, it's all about probabilities. You just have to be right more times than wrong, and at the end, then you will be profitable. But for me, this kind of spots are actually, even though it sounds counterintuitive, because you're thinking like, but hey, you're thinking that it could go up or it could go down. Yes, that is correct. But the thing is, the amount that can go up, or the amount of the volatility that is going down, is so big that you don't have to be hitting exactly the top or having exactly the bottom, right? So you can wait it out a little bit, and it's just a matter of like, okay, let's say price crashes down from here to this to the 7.1k line, and you are shorting from 7.1k, and it goes to like, 6.5k. You didn't get the short from 7.8. It's still fine. You're still making a very decent amount of money. Similar as if now you are not longing, but you're longing from 8,100, for example, because you saw that it's breaking out of that pattern, and it goes to 8,500 or 8,600. Yeah, you're not, you don't have the full swing, but you still have a major part of the amount that you should be gaining. So I'm not really too concerned about my top position or my bottom position here. That's not what really matters. What really matters is that you kind of know that a big move is coming up, and we'll go over the HVP in a while. That is flashing like crazy right now, and we just know that there's going to be a very big move, and basically you take the probabilities, and for right now, still the probabilities are, for me personally, more on the downside than the upside. But if I'm wrong, then I'll, of course, when I see it breaking up out of a green box, I'll be longing instead of shorting. So there's no, you cannot be like emotionally attached to a position, even though your opinion, for example, feels that, if your gut feeling says that, oh, it's gonna go down, you can't trust your gut feeling on that. You just have to trade what the price, because nobody can control the market, right? Nobody can control the market. You just have to go with what the market is telling you. And the market right now is telling me that it wants to, go up more. So that's what the market wants to tell you, or else we wouldn't be going up since that major crash right now. Although it sounds illogical, like I said, everybody is looking at the S&P. Why is the S&P keep going up, right? Why you keep going up while the economy is crashing? It makes no sense. Sure, it makes no sense, but that's what the market is showing me. Then you cannot be shorting, right? You should be going with the trend. Anyways, so let's go on the daily chart. This is still, like I said, this is still a rising wedge pattern, and usually a rising wedge pattern, breaks down on the bottom side. What I've done is, of course, now because we have moved the price up higher, this green box here is the box of like if we break down now below this green box, it's over, because we would be breaking down out of the rising wedge. So for example, if tomorrow the price breaks back down here and it breaks that green box, as you can see, we would be breaking down and out of that rising wedge. Still, everything is still pretty much the same. As you can see, we touched the green box once again, my shorting box that I've been showing you guys since the last couple of days already. This is where the EMA 200 is. This is where the moving average 200 is. And when will I start to become bullish? Of course, once we start closing candles above this EMA 200. So once we start closing some candles, daily candles, above this green, I would say here around 7950, I will just, you know, switch over and become bullish, because that would mean that we will most likely be breaking up and outside of this rising wedge rather than down. But for now, as you can see, this next candle that we are showing, it looks to me like a doji candle, which is usually representative of a reversal pattern. But what I'm really looking forward for is actually seeing what kind of, you know, typical pattern that we can see. For example, a reversal pattern like a double top or something like that on the shorter time frame. So let's go on the shorter time frames, on the 4 hour. So this could be potentially our first top, right? And then what happens is price can make a small range down, then it makes a double top basically, but not as high as this previous one, and then breaks down out of this rising wedge. So this is a little bit the price situation that I am expecting right now. Everything looks pretty much overbought right now. Well, overbought, that's a big word. But a lot of momentum indicators are showing that we are slowing down, at least for now. So I do expect that price is most likely going to be retesting this zone here at, like, what is it, 7,500, and most likely even drop even a little bit lower here to like the 7.2k area. That is what I am expecting. But if that happens and we are pushing back up and we are creating that second lower high, then that's when things become very confluent, and we can see that most likely we'll be dropping down. However, what can also happen is that we spike up here, then form some support here, and then we'll be breaking up out of this channel, right? Out of this rising wedge. That's a possibility as well, right? So it all depends on what the bulls want to do right now, because to be honest, right now the bulls are definitely still in control right now. So let's see what the price wants to do. But for now, if you are looking at all the indicators, we are showing some momentum more towards the downside, but that doesn't mean that we cannot be pushing up back into that green box once again. But as you can see, there is very little space anymore in this rising wedge. So it's either going to be a big break upwards, and then you can see the targets here already. That's the first target. If we would be breaking up out of that rising wedge, the target would be $8,550, $5,833 actually. So that would be my target, right? So if we start closing candles here above this EMA 200, I would be switching into a long and targeting that 8,500 area. If we start closing candles here below this, well, I'm already in a short right now, but if we start if we break this amazing green spot here, then we will be making a lot of money by shorting. Hi John, welcome, thank you for following, and welcome to the show. So then I would be keeping my short, let's put it like that, keeping my short, because I will be very happy, and most likely we will be trending down. So yeah, those are for me the possibilities right now, right? So how am I looking at the probabilities, right? So let's go into our HVP first. So I've been talking about the HVP for a while. As you can see, it on the 12 hour, this has been contracting since our major crash, all the way from here, all the way down here. As you can see, we are already the apex would be on the 11th of May, which is our halving date. But usually what happens in these patterns is we only go to like 70 to 75% of the triangle before it basically explodes out. And since this is such a long contraction, we're talking about a $2,000 move or something like that. So like I said, these are the kind of spots where, you know, as a trader you want to be in, because it's going to be a huge move. I'm not saying that it's going to be like $2,000 in one shot, right? I'm saying that it's going to be like a big move that is going to be like $500 or $600, and then it will expand more onto that, and over a week time or a couple of days time it will become like a $2,000 move, something like that. Well, let's go here into our expected moves charts. For our expected move chart on the 12-hour, we can see that the first standard deviation right now is at 7,817. So if we would be pushing up towards that area, 7,000, it would be just swiping once again our green box, and the bottom area would be 7,596. So that would be just our nothing changes that much as well. But as you can see, we are a little bit sloping to the downside, so that that means we have a little bit of a higher probability that we are going to the downside. Thank you for liking the stream, Nilanshu, and welcome to the channel as well. Let's look at our stocks. As you can see here, this is the resistance line that I've been drawing. We still have a little bit of space going up, but I do think that we are nearing a very high resistance and it can go down all the time. We already have, there's our red marker right here. Our red marker is saying basically that it's a potential reversal pattern that is upcoming. If we look at our RSI, we can also see that it is making a slope down right now already. And once this one breaks down below this EMA, below the green line, then we will have a bigger pull back as well. So I'm just waiting for this to be touching this green line and see if we get a bounce from that area up, or we are breaking down. But most likely we are going down a little bit more. How about XRP? Well, XRP is going to be following Bitcoin. That is what all altcoins are doing. And XRP is, sadly enough, not one of the altcoins that is doing very well in comparison with Bitcoin, to be honest. Anyways, let's continue with our Bitcoin first, before I get all the questions about 700 altcoins or shitcoins. Because I know, I understand that a lot of people apparently get involved into cryptocurrency because they bought some ICO or some shitcoin, and but to be honest, if you are an investor, you should not be having too many altcoins in your portfolio. Yes, we'll be going over a little bit over other altcoins in a while. Let me finish up with my Bitcoin analysis first. So anyways, if we look at the CCI, we also can see that it is sloping down right now as well, and it's almost making a cross with the EMA, so that is not a very good sign as well. Let's go on to the daily chart. I wanted to show you guys something on the daily chart. Yep, the daily chart is right here. As you can see here, the stocks are also on the daily chart, has reached the resistance trend line that I've drawn here. So I do expect that most likely we will see some pullback within this day once again. But something that I wanted to show you guys is on the 10-hour. So on the 10-hour, the HVP, as you can see here, is already flashing because it has zeroed, which means that if the 12 hour is obviously not showing it just yet, because the 12 hour is a little bit on a longer time, but the 10 hour is already flashing red, and I think the 8 hour also is showing red. Let's go to the 8 hours. Yeah, the 8 hours is also showing red as well. That means most likely we will have a substantial move already, maybe later tonight, maybe tomorrow, or I think at latest would be Wednesday. That's basically what this HVP is telling me. So let's take a look at this HVP because I think that's quite interesting as well. So it flashed here, for example, it flashed here on the 20th of April. So let's look at the price on the 20th of April. The 20th of April, as you can see here, price was 7,100. And what happened a couple of 10 hours later? Bam! A huge red candle, and it dropped from 7,150 all the way to 6,760. So around a $400 move. That's the historical volatility percentile, the HVP. So as you can see, whenever it flashes, it doesn't give you direction of that the price is going to go up or down, but it does indicate that a very big move is likely to happen. So let's go back when it flashed again. Here it flashed again. It was on the 9th of April. So let's look at the 9th of April. The 9th of April here, the price was 7,350. And as you can see, 20 hours later, what happened? Price red candle, it dumped down from 7,350 all the way down to 6,750. So once again, I think a $600 move or something like that. $600 move after it flashes. Once again, it does not show direction. It only shows that there will be a big move coming, right? So basically, that's what happens to the HVP indicator. It's just keeps contracting, and at one point it's flatlining, it shows zero, and basically then that's when a big move comes. And as you can see, we are flatlining once again. So I'm expecting within the next 20 to 30 hours. So yeah, tomorrow or at latest by Wednesday, we should be able to see at least like a $500 or a $600 move. And that's what the HVP is telling me, but it doesn't tell me the direction, right? So what would $500 or $600 move mean? Well, that would be very exactly what I'm talking about, right? So if we would get that $500 or $600 move, we would be either breaking up towards our 8,500 line, or we would be breaking down towards our green box here at the 7,100 line. That's basically what my HVP is telling me. And we will see what will happen within the 20 hours, like tomorrow or by Wednesday, most likely. Before that, we will see what will happen. So why am I still biased towards the downside? Well, like I said, for me, it looks like we are still don't have enough strength to be breaking all that resistance. Also, if we look at the short term, maybe of the short term, if we look at the RSI right now, this pattern that we are seeing right now on the RSI, this does not show me a breakout pattern. So what you want to see is that the RSI makes some sort of like a channel down like this, all the way down, and then it has enough strength to break up, as you can see here. So if you look, that was here on the 20th of April. Let's take a look at the price. 20th of April. As you can see here on the 20th of April, it was bottoming out, and then it has the power to break up, and it makes a nice move towards that breakup area. Similar other areas that you can see here, similar here, it makes a move down, and then it has the power to break up, and then breaks the price zone. As you can see here, it moves down, it touches 6.4K, it has enough momentum, and it breaks up. So that's the pattern that you want to see on the RSI to see a breakup of the price. But right now, if you look at the RSI, what pattern is this? This is like a slow sideways type of movement. So when you have a slow sideways movements, okay, you can have like a small push up like this, and then the price will do a small push up, but it's not sufficient to be breaking a pattern, right? If you understand what I mean. So for me, this RSI pattern is looking to me more bearish, because this can easily break down a lot rather than pushing up high. Thank you for liking the stream, Patricio, and welcome to the channel as well. So that's basically the pattern that I'm seeing right now. I don't see the RSI making a pattern that has a sufficient amount of power to be pushing up but the HVP is telling me that we will have a $500 or $600 move within the 10 or 20 hours. So I'm just doing a logical deduction, and I'm just thinking like, well, if that's the case, what is the probability? The probability is just a little bit higher. It doesn't mean that it cannot push up, right? I've seen crazier things in this world, but that's what technical analysis is about. It's all about probabilities. So I'm just deducting, and I'm just thinking, okay, well, probabilities is just higher that it's going to break down rather than up, because all these patterns are showing me that there is a lot of top signals. Like I said, the Stokes are nearing the resistance line, so there's more chance that, of course, that it breaks down. We get a red sell signal here on the Stoke crossing, so more chance that we are breaking down. CCI is making a slope down. There is a chance that we cross this EMA line and then break down. So all of those things combined are giving me more bearish signals than bullish signals, and that's basically what I am banking on or trading on. And then it's very simple. I'm just using my green boxes of areas where I am defining my risk, because for trading, that's the most important thing, risk management. And I think a lot of people don't understand that part, where even though you make mistakes, you are still profitable in the long run because you know how to use risk management, right? So this green box is my shorting box area. I've been telling you guys that for a long time already. If things don't work out, then we just put a stop loss right here at 8,000 and what is it? A little bit above 8,050 or something like that. And that's it. I'll have a losing trade. And next time, and I'll probably switch it into a long, and things will work out, because most likely we will be targeting the 8,500 area. Will it be the most profitable trade ever? No, because I'll be losing a little bit on my short, but I'll be making it back on my long. But overall, I'll be gaining profits. If this works out, this short works out from this area, and it goes all the way down to where I'm expecting it, most likely somewhere around the 6.4K, then I'll be making a lot of money, which I will put into a little saving box, because next time I might be wrong and losing money again, so that gets a little bit deducted from my winning pots again. And then that's how you build up your bankroll, right? That's how you build up your safe, your stack of money. Now, something that is very, very bullish, and that is something that I've showed you guys yesterday as well, is the hash ribbons indicator. And as you can see here, the hash ribbons indicator has been printing a buy signal. So the buy signal is something that is very, very powerful in the hash ribbons. It has never been wrong before. So every time we got a buy, price always went up, always. So it has never been wrong in the history. It is one of the indicators that has a 100% win rate. So if we are looking at the buy signal here, then of course it is a long position that you have to be taking. However, as you can see here, there is this red flashing light here, and it happened twice before in the past when we had that red flashing light. It means that there is potential danger that it flips over into red territory once again. So that's the reason why I'm still very hesitant for myself to be putting myself into a long position, because if this red flash light wouldn't be here, I would probably be thinking, okay, let's go for it. Let's go for a long. But this red flashlight basically stopped me. And yeah, but yeah, like I said, it's not you who control the market. You will have to let the market control the price, and it will guide you into making the right decision. But for now, like I said, it shows a buy pattern, but there is a red flashing light, so that means for me danger. And yeah, we have to wait it out for what could potentially happen. Okay, so let's go into our CME chart, because that's what we are looking at as well. So on the CME chart, something that is very bullish right now is this bullish cross right here. The green line, the EMA 55, did finally, because we had on the spot price, we had a bullish cross, dead cross, the next day bullish cross, next the dead cross again, up and downs, and the CME chart never showed any bullish cross or any death crosses as well. And this is the first time. Yesterday we had, or today actually, it's today, right? Yeah, it's today. We had a confirmation of our bull cross. So does that mean that we are finally going to be going up as well? Well, the probability is higher. Yes, definitely. So yeah, it's really a very, there are a lot of mixed signals right now. But like I said, I still am more, I'm more lenient towards a macro bearish, but things can change very easily. And definitely, like I said, if the monthly closes above the EMA 21, that will most likely be convincing enough for me to be rethinking my medium position or my short position. Let's put it like that. But for now, I am still thinking short, and I still think that we are going to be heading down, most likely to this area around first 7.2k, maybe like 7250. What is it? 7250 area. Then make a small bounce, maybe a double top, and then break down out of that rising wedge. That's still what I am thinking is the highest probability for myself. And I've explained to you guys what the reasoning behind that is as well. And like I said, this whole structure, this whole push that we have been getting, it is on diminishing volume. So while the price is going up, the volume has been trending and going down most of the time. That usually shows that we are in a weak uptrend. But even if we are in a weak uptrend, can we not push one leg up higher and entice people or make people crazy and FOMO for the halving? Who knows, right? So that is a possibility as well, that we get some crazy wick action. But yeah, anyways, I'm still medium term bearish. I still think that we have a distribution pattern. If you use the Wyckoff theory, we have a distribution pattern. And this is our UTAT because we made a higher high. This is our UTAT right now. I think we're going to crash back down into our resistance area, and then move sideways a little bit, and then break down into our return of our mean in, not now, but in next month or something like that. But we'll see what will happen. Like I said, maybe tonight, maybe tomorrow, maybe Wednesday, we will already see what Bitcoin wants to do. So that is something to take notice of. And whatever Bitcoin does, to go back into the altcoins, whatever Bitcoin does, the altcoins are going to follow. So somebody asked about Litecoin. So Litecoin, let's open up the Litecoin chart. This is the Litecoin chart on the daily. Maybe I'll remove some of the indicators because it's a little bit, I'll leave the Ichimoku cloud there. Let's remove the TD sequential there. Okay, so let's take a look at Litecoin. And as you can see, Litecoin has a very similar structure right now as Bitcoin as well. We have a rising wedge or a rising channel, depends on how you look at it. This is our rising channel, I guess. If you just take the wicks like this, something like this, maybe this one here, something like this. Yeah, so we have very similar to like Bitcoin, where we have a rising channel, but the thing is, as you can see here, it's already below the EMA 55 on the daily. It's getting rejected there. It didn't even get as high as Bitcoin to the blue line. So that means that Litecoin is actually on a weaker state than Bitcoin right now. So it means also, if Bitcoin is going to go down, Litecoin is most likely going to go down harder than Bitcoin. So that's not something that is very, very positive. What would I say? It looks like a big rejection here. Most likely will trend down to like 42, somewhere around here on that yellow line here, 42.5, somewhere around there, and then make a small bounce there. And if Bitcoin crashes, then I would say it will get down from that rising wedge and most likely hit up around here, around the $40 level. That's what I would be looking at for Litecoin. But of course, it all depends on what Bitcoin does. If Bitcoin goes to, like I said, goes to like 8,500 or something like that, then I see that it will be going around here, which is near the $50 level. Well, $48.50, something like that, is what I would be looking at if we would be thinking about going higher. But overall, like I said, almost every chart will be looking the similar as Bitcoin. That's the reason why I'm doing mainly analysis on Bitcoin, because it's just basically the leader, and it just pulls up, either pulls up or pulls down the whole market. Something that I did notice on the altcoins is the following. Let's go on a 4-hour chart. That might be interesting to see is here, if we take the line chart here, this is the line chart. Let's remove all of that other stuff for now. Okay, so this is the line chart. Why do I have, oh, that's a VPR. Okay, this is the line chart, and below let's look at the RSI. This is the RSI right here. So let's look at the line chart. And what do I see here? So if we take here from this price to this price here, we have a higher price, higher high, right? Higher high. And then what's that? From that date is the 19th of April, 19th of April to 26th of April. So from 19th of April here to 26th of April here. So as you can see here, price made a higher high, but RSI made a lower high, as you can see here. So what does that mean? If let's take the cheat sheet. So when price makes a higher high and the RSI or your indicator makes a lower high, it means that we have a bearish divergence, right? So there is a potential bearish divergence right now on the Litecoin chart, according to me. That is if because this is not confirmed yet, it's potential bearish divergence, by the way, before somebody is telling me that, yeah, you said that there's bearish conversion. No, it's a potential bearish divergence, because we don't know that this is our top is just yet, right? So when this is confirmed, our top, then it means that we have bearish divergence. And when can we confirm that this is our local top? Is when this line is below the previous line here. If it breaks what's that, 44.04, and it closes the candle, it has to be closed. We're not talking about wicks. It has to close below that candle. Has to be closing below that. This would means that this would be our local top, and then the bearish divergence would be confirming. So we have bearish divergence also on the altcoins, which means, right, like I said, probabilities that we are going to have a retracement is higher, because most likely that bearish divergence is going to play out, and we'll most likely be hitting down right now, right there. And similar to in Bitcoin, if you have the bearish divergence on the altcoin, most likely Bitcoin is going to go down because of people that are selling their altcoins into Bitcoin, and then the price of the altcoin is going to be dropping down, right? So let's go back into our candles. But as you can see, the divergence is there. So that doesn't show, a lot of strength in Litecoin as well. Another thing that we can look at is, what can we look at? Maybe look at the, 1 second, at the HVP once again. Here, as you can see here, it flashes here, HVP on the 25th of April. Let's see, and 25th of April, it's here. So price was here, and then we had a lot of volatility, as you can see, and it dumped down to 43 43.75. So yeah, that's a quite a substantial. And ooh, the CCI is already going below the EMA. That's not a very good sign as well. So yeah, on the 12-hour chart, yeah, we're definitely gonna have a retracement. So I think that bearish divergence is gonna be playing out. And like I said, those are the areas that I'm looking at for Litecoin. Let's put it back so I can see. Boop. Okay. So yeah, those are the areas that I would be looking at for Litecoin. Most likely we'll be heading down towards like 42.25, something like that. That would be my zone. Maybe, yeah, most likely we'll get a bounce from there though. Yeah, most likely we'll get a bounce from there. 42.25, something like that. Retracement. Maybe we won't get there, but we'll have a small bounce here on the yellow EMA 21 first, but eventually it will head down somewhere around there. Yeah. Somebody asked about XRP. Well, XRP is actually even worse than Litecoin, sadly enough. Let's go into the XRP chart. So this is XRP. Let's take a look. Let's go to our daily first. So XRP, let's see. It did went up above the EMA 55, so that's a good thing. It's actually less worse than I expected, to be honest. So it's nearing this EMA 100 here at the blue line, so it's not that bad, but it's forming exactly the same pattern, right? So we have that rising wedge that we are forming here. Actually, it looks more like a bear flag than a rising wedge. Yeah. So a rising channel or a bear flag. I would think this is a bear flag. So where do I see it happening if we just take the here? Ooh. Ooh. That wouldn't be good. No, let's make a conservative bear flag in the channel, basically. Then it would be this if it would break down. 0.147. That would be my target if this channel breaks. Yeah, 0.147. That would mean also, this is only if Bitcoin is going to be breaking down towards like my areas that I'm expecting though. Like only if Bitcoin goes to like 5,400 or something like that, then that's when XRP is going to that level as well. Right now I see a lot of rejections. Let's take a look at some the Stokes. Let's see. Oh, it still has some space, but it's getting near up there. RSI is still doing okay. It's not that bad. So yeah, let's go on to the 12-hour. Maybe we see something else there. This is the first time, by the way, that I'm checking any of these altcoins because I don't really care about them. Let's see. We got a sell signal here with the Stokes that are hitting the top here, as you can see. Got a sell signal there. We got an HVP on the 25th of April. Let's see what happened there. Was there any big move there on the 25th? Yeah, it was some volatility. Well, as you can see here, it actually went up in the price. So you see HVP just says that there's a lot of a big move coming, but it doesn't tell me what the move is, up or down, of course. But yeah, this looks very, very weak. As you can see, a lot of sideways movement. It actually went down here, and then a lot of sideways moves, and never made a higher high, unlike Bitcoin, who made a higher high, right? So it's looking very weak. And yeah, I would be looking at when Bitcoin crashes. If Bitcoin crashes, I would be looking at 0. Here, what's that? 0.16. If Bitcoin goes up, then yeah, I would be looking at this area here, 0.217, something like that. Hi Saif, thank you for following, and welcome to the channel. But yeah, not really interested in any altcoins right now. There's only a couple of them that I am interested in, and to be honest, I barely have any altcoins, so yeah. I'm not really interested in it. I mainly just do trading on either commodities, forex, big indexes, and Bitcoin. That's basically what I trade the most in. All the rest don't really care. Let's take a look at gold. I've been very interested in gold, but I'm still waiting for another pullback. I don't know if gold is going to pull back anymore, but yeah, I was waiting for it. Let's take a look. Yeah, it does have, it's showing some sort of weakness on the daily, so maybe I'll get my chance to get cheaper gold. I'm actually waiting for, well, it touched here on this yellow line. I was actually hoping that it would go down to this green line here at 1633, but didn't break. Immediately it got bought up again. So I was hoping to something like this here, but never happened. Managed. I already have quite a substantial amount of gold position though, personally, so not too worried about it. But I still think that we have a little more pullback before we are going to skyrocket. But this previous weekly close was very positive as well. Engulfing bullish candle. Yeah, looks really good. Gold. But yeah, slowly sideways. Maybe a small drop back to previous bottom of the candle, 1680, something like that. That's what I'm expecting. But overall, I think gold is going to be going towards 1800, 1825 by next month. So yeah, another 100 points up, I think, by the end of next month or something like that. That's what I'm thinking for gold. Did something happen in Bitcoin? Nope, still nothing happened. Is everything still the same? Do we still have? Yeah, yep. I'm very happy with my short. To be honest, 7,800. I think I don't think it can get better than that. We're just waiting for this confirmation here, but yeah, everything is telling me more sell than buy. We have a couple of indicators. Like I said, this hash ribbons is a positive thing. This bullish cross on the CME is a positive thing, but like I said, RSI pattern doesn't show much strength. I think we'll have a pullback, and once we have a pullback, if we get near this wedge here, I think people will be changing their mindset very, very quickly, because everybody is basically thinking about the halving. Halving is gonna make me rich. That's basically what everybody is thinking. Halving is making me rich, but this if you compare, okay, that's something maybe that a lot of people don't do enough checking. They didn't check what happened in the previous halving situations. So 8 years ago, when we had our halving, what happened is we had a very long accumulation phase before that, and price actually slowly was accumulated and went up. Then we got our halving, and then we went parabolic, right? Second halving, 4 years ago, exactly the same thing happened. We had a very long, prolonged accumulation phase, and then price went slowly up, and then after the halving, it skyrocketed. But this time, in this halving, we went down. We went, instead of a accumulation phase, we went into from a distribution phase. So we went in a downward trend, and then we have our halving. So for me, that is the perfect marketing for a dead cat bounce. I mean, if you really think about it a little bit, so people bought a lot of Bitcoin in the past, accumulated starting from like when we had our major crash, around 3,100. That whole period, they have their Bitcoins. Some of them didn't sell at 13,000 or at 10,000, but now they have that halving marketing, free marketing, and it's making this bounce towards 8,000 or something like that. I think a lot of people will be just selling, and that's what the psychology of a dead cat bounce is, right? They are trying to lure you in with something and making it look like very, very positive and pumping, and then they dump it on your head. But yeah, I mean, the more and the longer I look at the charts, it just gives me more probability that we are most likely going to have a breakdown rather than a break up. I'm just waiting for the confirmations of the price. Like I said, I don't really care what the price does. If it goes up and it breaks above my green box, great. I'll be looking for a position to switch it into a long, and if it does what I think it will do, then I'll be very happy, and I'll just wait for and to that it reaches one of my targets and take profits. That's it. That's all it is. And yeah, as always, I'll be, well, actually, maybe I won't be on a daily basis with you guys, because my wife is actually 9 months pregnant. So she is 38 weeks and 4 days right now. So my firstborn, my son, can be born at any time and point. So if that happens, obviously, I won't be able to be, making any research or doing any trading at that point. So if someday you don't see me posting at 7:30 UTC plus 8, then you know that I'm at the hospital or something like that, right? But if not, I will see you guys tomorrow, 7:30, like I said, on YouTube live or on Facebook. And I hope to see you guys again tomorrow, and we'll be updating everything. And maybe that HVP signal is going to be working out, and we will see some big movement before I go live once again. So until tomorrow, please stay home, stay safe, and of course, stay COVID free.